The S&P 500, and we've looked at this before, but if you consider it on a long enough time frame, in reality, if you do a full halfway back, the S&P 500 has held halfway back long. A full 50% retracement from 1929 lows, or all-time lows, or really you can consider zero at this point, to all-time highs. We have maintained and held a 50% pullback. This trade has a 1950 target. I mean, it's when you step back at the larger time frame, it might be a little difficult to see, but it's very much there. Now I want to go back and I want to look at 1929, the fall in 1929, because even back then there was in the market, there was still holding 50% shorts to targets. Even after 29, we had held a 50% short for almost a decade. No, for over a decade, from 32, and we didn't break it until the post-war market in 1951 is when we finally broke the full 50% short after the Great Depression, or coming out of the Great Depression. That's what started, in 1951 is what started our bull market that we have been inside of for the last 70 years. Really, no, since the inception of stock markets. And I'm kind of a perma bull, if you want to get down to it. The reason being is that, sorry, I'll explain this in a second. It's not really being permanently bullish. It's the belief that society and the markets, particularly what the market is supposed to represent in society, you have to assume we're in an uptrend from the beginning. Otherwise, you just assume that we're all going to shit in a handbasket every day of your life. After 1929s and after the 51 breakout, the market began a new series of extensions. I'm not going to draw those extensions up, but you can see them trading. Oh shoot. You can see them trading in this 1951 to 1970 period. What I do have up on the chart is the first major pullback we had in the stock market wasn't until we broke above the 100 figure in 1970. We then went into a recessionary market, and where we went into this expanding flat correction that finally completed in 1974. Specifically, it completed on what is this, in 9/30, 1974 it looks like. So in early October 1974 we completed a major pullback. In fact, it was on this chart, drawing from zero again to all-time highs at that point in 1974, the market held a full halfway back long. In 1974 is when we traded the low. We traded our low in 2008. Okay, so 1974 is the equivalent of 2008. We hit that trade's target of 147 in 1983, 10 years later. 1984, we were hitting targets. That was 10 years, actually almost exactly 10 years. We hit targets. That's the equivalent of us hitting 1900s in 2018. I don't know if it'll happen that fast. I actually kind of have the idea that it might actually be happening faster now. Because from the start of our recessionary period in 1967 to the end of it in 1964, we had a 7-year period, which that's beginning from low to low. Low to low in this last recessionary period has been also 7 years, from 2001 to 2008. Not to mention the 1967 to 1974 period is approximately 40 years after the 30s crash, the 1929 into 30s recessionary period that we were in. So 40 years later, one generation later, we have our next big full halfway back. And coming out of 1974, the market has now rallied in the biggest bull market of all time. We've seen the largest growth rates, the most innovation, the biggest, um, really the biggest boom in human history in prosperity in the last 40 years, coming out of that 70s recession. And coming into the 2000s, 40 years later, again, the next generation has their great pullback, their big, full halfway back. Following this pattern, from low to low here, really, well, the lows are in '03, I guess so 9 lows, I'm sorry, so 6 years. We have 1950 targets in the S&P 500. Now what I want to take a look at is, okay, so that's great. We traded a halfway back long off of the 675s. So where are we in trend now? Heading up off of the 666 lows. And what's going to take us to ultimately those 1900 targets, just moving down on the time frame. So let's bring up our S&P 500 chart. I'm going to bring up a daily chart, and I'm going to remove all the current drawings I have on this chart. So you're now looking at remembering that we had a full halfway back long, approximately at the 800 level, looking for 1900 targets. Off of our sorry about that. Alright, sorry, things are getting a little slow here. My software's bogging down a little bit. I definitely need to upgrade this rig. Okay, there we go, much better. So coming off of our 666 lows and into this new period of growth, coming out of this recessionary period, we actually have begun extensions from an anchor drawn at about 800 to highs. We held our first extension long after the 666 lows at the Jackson Hole, Wyoming lows, where the Fed told us everything would be all right. We held an extension long. This extension long actually blew through its targets, but began a new series of extensions that traded once, twice, 3 times, 4 times, 5 times to target. Same anchor new high. The 61.8 line of that extension actually held the day of the flash crash to, you can see here, show you, this is the flash crash lows here. They held the 61.8 line, only to fail it a week later. Upon failing that 61.8, the market did actually pull into a halfway back short. That short traded at 11.25, so they were unable to get to their targets. What was defended as support was the same anchor new high from this original 800 extension to new highs. That has now then confirmed and begun the new series of daily/weekly extension longs that the S&P 500 has been inside of for the last 4 years. Looking at there were at this point in time in 2010, there were two. Shoot. There we go. In the 2010, or the flash crash of 2010, post that summer, the market flagged inside of the all the way halfway back short at 11.25s, and the 1,000 level, which is 1,008s, which is where the full halfway, or sorry, the extension long entry was. That long, eventually, the market was bid up and broke the short. It could be removed from the charts and continued on into 2011 to hit the 1315 targets. After targets were filled, anytime you hit targets on an extension, you can take your extension from an 800 anchor lows and drag it up to new highs, same anchor, new highs once targets are filled. The pullback we had in 2011 came right down to the 1086 lows, or entry points for the next entry into the extension long. That has traded same anchor, new highs now, and has a 1507 target. So already this market has a potential swing trade daily long target of 1500 without even considering it's in a full all-time halfway back long with a 1950 target. This year, beginning from actually the inside this move up now, we have a trend. And that trend was, they held a full halfway back long off of lows in November, which has traded up into its targets. And now they have traded from the entry lows to target highs, which were the entry lows were on Thanksgiving of 2010 to highs in 2012. I'm sorry, Thanksgiving of 2011 to highs of 2012. We have held the next traditional and have upside targets at 1485s. Moving down now to an hourly chart to see where we are inside the hourly time frame. Just bringing the whole charts, everything down to in time frames. Off of our 1262 lows, we actually held a full halfway back long. This long hit its targets, the upside. Upon hitting targets, the market pulled into, oops, every pullback rather, too. Every single pullback the market's done has held a halfway back long from the lows to highs of this year. We actually have multiple targets above us. We have a 1318 or 1319 that has a 1400 target, and they just held yesterday full halfway back from those lows to new highs at 1354s. We have 1400 targets in the near term. We're talking days here to the 1400 targets. And then maybe potentially weeks to the 1500 targets, 1485, I'm sorry. And then after that, the 1507 targets. So there's basically a breakdown of the S&P 500 from 1929 through really up into your hourly charts. If we want to get even busier with this, we can head down to a 15-minute chart. There's not much to see here. This has been very much straight up. So instead of going down to 15, let's go down to the micro chart and take a look at the micros that traded up off of yesterday's low. Let's see if you can follow along. It's been straight up in extensions, but off of yesterday's low that filled those 54s, right? They weren't invalidated. The 1345s were respected. Market held its first halfway back long to target. The next in the series traded to target. And after that, the market actually blew out of targets and began to hold extensions. Into the after hours, they held an extension drawn from the 1358s to highs. They held it once to target, right there, twice to target, 3 times to target, and then blew out into new extensions. Coming into the European session, they were holding a 1365.75 anchor to highs. They traded once to target, twice to target, and third time blew out of targets, which means now from highs to highs again. They traded a 1373 half to highs. Same anchor new high, did not trade again. I'm sorry, traded in a front run, blew out of targets, and they are now holding extensions drawn from the 1382s to highs that have traded once to target, twice to target, 3 times the target now. Same anchor new high has a bullish above, bearish below, short-term line in the sand at the 1384s. That breaks, and we will have to confirm support, but there are a number of levels below us that can hold now. A number of prior extensions, as well as the full halfway back long. Each one of these levels I have drawn up is actually a valid place the market could potentially hold support, as it is, as they are all as they are all actually valid places that the market has held prior extensions now to new highs. So we'll see. It's bullish, that no doubt about it. We we have targets above us, and just from yesterday we have a 1400 target that they look like they're getting darn close to getting. So hope you enjoy that, and I hope you understand now why the trend is very much up on almost every time frame. And we actually are coming out of what we feel is a major generational low for the stock market. So it's time to take the recessionary cap off and starting to put on the cyclical bull trend cap. A great example, I mean, we're in 401k longs from 1080, or I'm sorry, 1160s, 1180s from this last, that was the last lows we held. So with that being said, trends up until it's not, and I hope you enjoyed the video.